What in the world is going on with mortgage rates? They are jumping like crazy. Now, what does that rise in mortgage rates likely going to do to home prices and the real estate market at large as we move further into 2022? Hi, this is Andrew with the S2 real estate team based here in Frisco, Texas. And you may have noticed that mortgage rates have jumped substantially over the past few weeks. As a matter of fact, if you saw any videos that I put together and I did towards the end of last year, we knew mortgage rates were going to go up. It's been forecast. And there was a discrepancy on about where those rates would be. And in many instances, they were talking about the experts, that is, 4 out of 5 dentists, whichever you want to look at, were saying that mortgage rates are probably going to end up somewhere between 3.5% and 4% later this year. And now here we are, and we're nearly at 4.5%. So what in the world is going on? We started the year back in January at about 3.11%. And now here we are, as I said, roughly 4.5% as we approach the end of March. That's a huge increase, right? And it's got a lot of people wondering exactly what in the world is going on and what does this mean going forward? Well, just last week, Sam Cater, he's the chief economist at Freddie Mac, and he made a comment. He said, rising inflation, escalating geopolitical uncertainty, and the Federal Reserve's actions are driving rates higher and weakening consumers' purchasing power. So what does that mean? Well, mortgage rates in general, or rates in general, just like the financial markets, have been reacting to what's going on in the world. Jobs reports, inflation reports, the conflict in Ukraine, that's the geopolitical uncertainty, all of that's going on. And it's having an impact on mortgage rates. The Federal Reserve is now having to raise rates and said they may raise rates as many as 6 additional times this year to try and combat inflation. Now, just because the Fed raises interest rates doesn't necessarily mean mortgage rates follow. Mortgage rates are more closely tied to the 10-year Treasury bond. But saying that, the Federal Reserve has also been buying mortgage-backed securities as a way to keep the economy moving. They're tapering those purchases back. Without getting into all the finance aspects of it, bottom line is rates are going up. Now, in general, much of the rate increases that we've seen so far is in anticipation of what we will see later this year, according to the deputy chief economist for Freddie Mac. They're kind of pricing in where things are going to go now, right? So it's kind of hedging where it is. It is largely expected that the pace of mortgage rate appreciation will taper as we go further into this year. But obviously rates are much higher. As I mentioned earlier, it is impacting consumers' purchasing power. What does that mean? It means houses are becoming less affordable, which is no surprise to anyone that's been contemplating buying a home. They're getting expensive. Less affordable doesn't mean unaffordable. And I realize that's going to be different in different areas of the country and also different for each individual family in their own situation. Now, when rates rise, initially, we quite often see home prices bump a little bit. They go up a little bit. So why in the world would prices go up initially as mortgage rates rise? Well, again, pricing is a direct result of supply and demand. Right now, you may have seen on the news or seen forecasts that, home sales are down. Well, home sales are down because supply is down. You can't sell what you don't have, right? So supply is running ridiculously low. Here in North Texas, we have about a 2-week supply of homes, which means everything for sale will be gone in 2 weeks if nothing else gets listed. You consider a balanced market is considered 6 months worth of supply. You can kind of see the predicament that we're in right now. But why are prices going up when mortgage rates go up? Well, a lot of people that have been looking when rates go up, they want to lock something in. So there's an initial surge in activity, gobbling up things even quicker, causing rates to, or home prices to bump slightly. That's going to settle back down. I do not see, at least here in the DFW market, I do not see that home prices are going to fall. The amount of people moving in and the amount of demand is still far outstripping supply. And that looks as though it's going to continue for the foreseeable future. But I do think the pace of appreciation is going to come down. And we are already seeing it. So the impact of the rising rates, here's what we're seeing right now. I was out showing property over this past weekend. A couple of months ago, if you were to look at condos, typically condos that investors would buy under 200,000, there were some available and they weren't receiving multiple offers. They weren't receiving bidding wars. Days on market was a little bit longer, but as home prices have gone up and now mortgage rates have gone up, a lot of potential buyers that were looking at maybe an initial first home, 3-bedroom, 2-bath home, are now finding those are more expensive than they thought. And they're moving towards those condos, those lower priced condos, to at least get their foot in the door and get into the market. So we're suddenly seeing more competition and multiple offers in those lower priced condos. That's one thing. I'm also noticing a few price reductions taking place. That doesn't mean that the market's falling. It means that many of the sellers that were anticipating the market still moving the way it was, they may have priced their home too aggressively to begin with. Those sellers are starting to lower their prices. So that doesn't mean that prices are coming down overall. I do think you're going to see activity, especially at the lower price points, increase, and you're going to see a little bit more balance come back into the market as we go forward. But I don't see anything to indicate that there's suddenly going to be a turn. And again, everyone's got an opinion. Check on YouTube. There's plenty of them out there. Ultimately, you need to do what's best for you and your family, but hopefully you can make that decision based on the actual information on what the market is telling us. If you'd like, directly below this video, I've got a link to my blog. In that blog, I've got slides and additional information and some of the quotes I've used today as reference material for you. There's additional information there so you can see where I'm getting this information from. I also have a link to a market report. The market report is for Frisco, Texas, but you can put any city or zip code in the country in there and get the latest market data for your particular market. It's going to show you what's going on specifically with regards to number of homes for sale, pricing trends, the speed of the market, favoring buyers, favoring sellers. Is it speeding up? Is it slowing down? So take a look for that directly below. And again, if you have any other questions about the market in particular, please don't hesitate to reach out. You can give us a call at 469-296-5230 or send an email to contact@s2realestateteam.com.